Brothers, good afternoon. Thank you all for joining us for the session in Breakout 2 for getting started with the reserve study. I'd like to introduce our speaker for this breakout session, Jim Lee, Minnesota 1978. Jim currently serves as the Secretary of 1848 Properties Incorporated and also as a member of the 1848 Housing Committee. Jim previously served on the Financial Advisory Board and as a trustee of the fraternity. Professionally, Jim works in real estate and holds the title of Senior Principal for Kensington Realty Advisors located in Chicago, Illinois. Jim, the floor is yours and I'll get the presentation started.
Sounds good. Good afternoon, brothers. I'll let you take care of the slides. This session is getting started with a reserve study. I'd prefer to think of it as a reserve study implementation because hopefully by the end of this session, we'll discuss how to get started, how to finish it, how to implement it, and move on from there. So 1848 has discussed this extensively, and it's one of our what we consider one of our best practices, and this has been adopted too by the archons. If you want to just move to the next one here, Dio. One of the biggest things that faces us in the house corporation arena is how to plan for repairs and replacements of major components, minor ones, and everything else. And everyone underestimates this. It's a big issue. And when you dig into this and dive into it, you're just amazed at the end of the day at how much it costs to run a facility like this. And if you don't work at it though, and get into it, these small items become big maintenance issues. It becomes larger remodeling issues, and it leads to obsolescence. So we've got to tackle this. And what we've got here is a tool on our website that I'm walking you through here today that will help you understand what the full capitalization needs are for your chapter house. When we're thinking about operating the house, normally when we're talking about rent, we're talking about including, the usual things, the mortgage interest, the insurance, utilities, maintenance, and all those items. But we also need to factor in the true cost of the wear and tear in the long term of operating that house. And if we can at least try to get our arms around that, then we have a better idea of what kind of rent we should be charging for the brothers that are living in the house, and also what kind of fees we'll be charging to those that are not living in. If we don't do that, then we're just pushing these costs out to future brothers and also to fundraising issues, fundraising requirements in the future. Not everybody lives in the house, but all the brothers are utilizing it in some way, shape, or form, whether it's once a week for meetings, whether it's for dinners, lunches, parties, fundraisers, functions, all those kinds of things. And it will be different if you've got a small number of beds, but a large chapter. Obviously, the wear and tear from the outside is going to be more than those that are living in the house. You can make the case that those living in should be charged more for this because they're utilizing it more, but maybe they have more of an ownership in the house and maybe they take care of it better than those that come in and just party. So those are all kinds of things that you need to think about, but we've got to think about how to make sure that we're operating the house in a fiscally responsible manner. Next slide, please, Dave. Thinking about this situation and even looking at the spreadsheet that we will here in the next few minutes, seems like a really daunting task. It's a big project. It's huge. How do I start? I'm just going to kick the can down the road. But fortunately, 1848 Housing has a tool for you to use, and it's our reserve study tool. It's pretty simple. It's complicated in behind the scenes, but to use it is pretty simple. And getting started, frankly, is much better than just doing nothing. You will probably see at the end of the day that your capital needs far outweigh what you have for cash on hand or any kind of reserves, but that's a common problem. I've used this tool more recently with a couple of other not-for-profits that I'm involved with that are involved in affordable housing and supportive housing. These are groups that have dozens of properties, not just one. So to get your arms around that is quite a task. And in that case, we hired an intern to fill in the blanks on this spreadsheet. Basically, it was a derivative of this spreadsheet. And it was done in a very short period of time, and it became a very useful tool for those organizations as well. So you just need to dive in. With this tool, there are relatively few inputs. Most of it is calculated automatically, and it is projected to give you the outputs that are very powerful in terms of the information that you can use going forward. So next slide, Dale. We're going to see that on the macro level of the inputs, there are only really two. On the component level, there are only 4 per item. The components are basically, I'm talking about the building components. So it may be the roof, it may be the driveway, it might be the dining room or the dining room tables, or it might be the living room sofas. It's all the components that we need to think about, but we only have relatively few inputs per line item. And we want to discuss about how to find some of those numbers that you may not have the expertise to just come up with on your own. And in terms of the output, this is going to tell us probably how far behind you are in planning for replacements. Don't let that deter you, but that's probably what you're going to see. It will help us in figuring out how much rent, how much parlor or townie fees we should be charging going forward versus what you're currently charging. And you may not be able to pass it all on. The market may not allow that, but it will help you at least get a better handle on that. And you will also be able to look at this and see where you should be thinking about fundraising. At what point are a lot of these components going to become obsolete, need replacement? The reserves are not going to be enough to catch up to that point, and you're going to need to be thinking about fundraising. You don't want that to happen next year. You want to get your arms around it to realize that it's going to happen maybe in 5 years. So let's get started. Dio, next one, please. This is what it looks like. And at first glance, it looks a bit complicated, but it really is not. I'd like you just to focus on what I've got highlighted in yellow, because that's all you need to input. On the macro level at the top, you just need to input the number of beds in the house and the CPI index that you're expecting. That's just the inflation rate that you expect to continue into the future for when you're going to have to replace some of these components. This is not a science, this is a guesstimate. This whole spreadsheet is a guesstimate, but it's something to give you at least an idea of the magnitude of what you're looking at. In terms of the number of beds, when you first open the spreadsheet, you'll see it's an automatic calculation. It's fed in from another tab within the overall workbook. And I'll go through the 4 tabs in this workbook. You don't need to utilize all of them. You can use this as a standalone tool. This 30 is coming from a budget template, but you can go right into this template itself and this tab and input the number of beds. Now, that's not necessarily the number of beds in your house. Say in this example, there may be 40 beds in the house, but historically you've only been able to get 30 occupied in any given year, and you expect that to occur in the future. So it doesn't help to put in 40, because you're not going to be able to pass along these costs to all 40. You're going to have 30. So put in what you realistically expect to have in there. Next, you can look at the other components here, such as the roof. In this situation, nope, keep it back there, if you will, please, Dale. Next, pass the prior slide. Thank you. On the roof, all of these are the components, and you can fill in whatever you want to here, and I'll talk about that in a minute. But on the roof, the rest of everything below that, whether it's asphalt or a shingle or whatever, those are just informational. Those don't feed into any of the calculations. You have to input the expected life of that roof. I'll talk about how to find that in just a minute. It's very easy. The current age, you need to guesstimate what that is. Maybe somebody has some historic knowledge of when that roof was replaced, and can just plug that number in. So if you think it was 15 years ago with an expected life of 30, automatically calculates the balance that's left on the useful life. The next yellow to infill there is the expected replacement cost, or the current replacement cost. That's the toughest number to come up with. And I would suggest for this project to tap 1 or 2 undergrads that have some interest in this kind of thing. Maybe they're studying architecture, or maybe they're studying construction management. and they don't mind digging into what some of these components might cost today. You can Google a lot of these things. You can figure out, what kind of stove you've got and about what it would cost to replace that today and plug it in there. And you have to do that for each one of these items. Then the next one right below that is how much do you have on hand in reserve? Now, likely you don't have this split out line item by line item. Say you have $200,000 in the bank. You don't have it probably reserved specifically $10,000 for the roof. But I would suggest leave this blank until you finish the whole worksheet and then go allocate that 200,000 among the line items. Maybe you decide to put in 10,000 here. It's just to give you a handle on how much of that 200,000 may be going for the various items and to go from there. So that's all you need to input. And as you go then to the right, it'll show you that the cost in the 15 years, which is automatically calculated, gets you to the blue box. And in this case, on that blue box, it'll say that in 15 years at your 2.5% inflation rate, you can expect to have to spend about $65,000 to replace that roof. And if that's the case, then that's what you need to reserve for. And so the numbers right below that are automatically calculated. So it takes that $65,000 less the amount that you currently have on hand in your bank account and divides that by the number of months in 15 years. And that tells you that you're going to need to have $200 a month, basically, reserved for the roof and divided by the 30 beds. That's your $6.71 per person per bed. We'll get back to that later on, but that's how the spreadsheet works. And that's all the automatic calculations. So you don't need to worry about those things. The left-hand side are the components. Those are all the building materials, etc. So that can be everything from the physical structural items to the FF&E, the furniture, fixtures, and equipment. All of those things need to be customized to your particular situation. What we have plugged in here are examples of what might be in a typical house, but you may not have you may have a sidewalk in addition to a driveway. You may need to change some things in here. If anybody has an operational knowledge of how to work with Excel, it's very simple to make those changes. And again, you may want to tap an undergrad bro. You just, for instance, if you don't need one of these components, you just highlight those three rows and hit delete and they're gone. Similarly, if you need to add something, say below driveway, you want to add sidewalks, just highlight those 3 lines, hit copy, insert 3 more lines, and you've got your next line item. You just rename it to sidewalks, and all the calculations are there for you to work with. So it's fairly easy. So let's move to the next slide here, Dio. Looking at that left-hand side of the spreadsheet, let's talk about all these components. This is what we've got in the spreadsheet. So you start with your roof, and then you've got your roof trim. It may be the gutters and the downspouts and things like that. Exterior paint, interior paint. You may have fences, you may have driveways. The driveways might be asphalt, they might be concrete. You might live in harsh weather, you might live in a moderate climate. So all those things need to be factored in. If it's asphalt in a harsh climate, your expected life is going to be less than otherwise. Do you have an irrigation system? There's a lot of things to conk out in a system like that. Landscaping, bushes don't last forever. Your landscape is going to have to be replaced within the next 15 years, say. Many people don't realize that the sewer lateral, the connection from the house to the city sewer at the street, is normally yours to maintain and to pay for if anything goes wrong there. Electrical can take, you may want to split this into a number of different components. If you have aluminum wiring, that's going to need to be replaced, so you need to plan for that. Plumbing, whoever did this didn't exactly have plumbing spelled right. But in your plumbing, if you have galvanized pipes, those are eventually going to need to be replaced with copper. If you have polybutylene plastic piping, that's going to have to be replaced, and so on. Phone, cable, internet, maybe phone is obsolete in this description here, but the cable and internet infrastructure, replacement of routers, all those kinds of things need to be factored in. Fire life safety is a very big focus of 1848 And so you need to take a look at the components in that. They don't last forever, and they definitely need to be kept up to date. You may have a security system, hopefully you do have. Living room furniture. When we start looking at expected life, take whatever that life is and cut it in half, because this is not a single family home, and that's what those expected life tables will show you. Dining room furniture, same thing. Do you supply beds? Do you supply mattresses? Do you supply dressers? Those all have certain lifespans, and they're going to be needing to be replaced. The kitchen components, those are big ticket items, and that may take a little deep diving to figure out what the replacement cost is on those. So those will take a little bit more time than some of the others to figure out. The bathrooms, there's some descriptions in here: how many sinks, how many showers, how many toilets. Your undergrad helper can figure out what all those costs are to replace today, but then you need to factor in the labor to do all the replacements. So maybe you double the cost of each of those items. The flooring, carpeting is going to be replaced maybe in 5 to 7 years, hardwood in much longer time. If you've got terrazzo, you may never need to replace it. So you need to think about those kinds of things. Your doors, your exterior doors will last probably longer than your interior doors, especially if they're hollow core. Those don't last very long, especially in a fraternity house. Windows, everybody thinks windows last forever. They don't. Their expected life is typically 25 to 40 years. So you need to think about that. Do you have a boiler or do you have a furnace? Do you have more than one zone on the furnaces? Maybe you have 2 furnaces and you need to split those out. One's newer, one's older. Here's a situation where you may need to call your boiler maintenance company and say, what would it cost to replace this thing today? So, and how long do you think it's going to last? Just to help you on some of these inputs. And then we have some other inputs, and you can very easily fill in to customize this for what you want to see within your house. So let's go on to the next one here, Dio. Expected life. Most of us are not in that kind of business where you can figure out what this is. So what do? You Google it like you Google everything else. And I've done this a number of times, and you might want to take a screenshot of this slide, because what you want to Google, the most efficient way to find this, is building materials life expectancy chart. And then within that, about 3 or 4 tabs down or so, you'll probably find some home inspector that has this chart on their site. So there is an association. There's an association for everything, but there's an association for home inspectors called the International Association of Certified Home Inspectors. This is a group that you might want to think about in the future using to do periodic inspections within your own facility, because if you've got a newer house, maybe it doesn't need to be done as often, but if you've got an older house, you should have periodic inspections by a third party. And these are qualified individuals, as opposed to some fly-by-night that you might find on Yelp. So I'd suggest you just kind of think about using these people in the future. So anyway, you Google this chart, and here's what it's going to look like. Dio, next slide, please. These are 2 of 18 pages. And what you'll see in here, you can do a deep dive. You'll see the first thing listed is caulk. I don't think you're going to care about how long the caulking is going to last on your house, but you are going to care about how long the dishwasher may be expected to last. How about the gas range? And then it will go into the roof and driveways, asphalt, all these things for 18 pages. But what you'll find is that you can probably pull this up and populate that entire spreadsheet in about 15 minutes as to what all these expected lives are. It's not going to be perfect, but it'll at least give you a handle. You don't have to take days trying to find this all out for yourself. It's all laid out there. So plug those all in, and you'll figure out all of those. And then the trick is getting the replacement cost numbers, as I had mentioned previously. You're going to need to Google that. And try to come up with those. That's going to be a little more time consuming. So we've tried to make this simple, even though that's going to take a little bit more time. So let's go on to the next slide here, Dio. So what is this telling us? What you're seeing here that I've highlighted in purple is at the very bottom of the overall spreadsheet, that complicated looking spreadsheet. So when you call it up on your computer screen, you're going to see the first piece that I showed you, probably another page and then a third. It's only about 3 pages long on your computer. This is the bottom right-hand side of the end of the spreadsheet. And what it's going to do is show you the total cost of all of your components to replace today. And that's your $591,000 number. Off to the right, it shows you that it's going to cost $715,000 in total to replace all those items in the future when they wear out, at the time that they wear out. So again, to the left, you see how much you've got in reserves here in $294,000. So you've got to raise $420,000 to replace all of those components eventually over this period of time. And it's to a future value number. So it's going to be more than $420,000. So on the right again, below the 715 is the number that is calculated by the spreadsheet, 6270. Remember that number. That's the amount each month that should be set aside in order to fully fund these reserves. The 6270 is a perfect world number, but it's not spread out evenly. And we'll discuss that in just a minute too. But if you take that 6270 divided by the number of beds, you come up to the 227. That's the amount per bed per month that you should be charging in rent for those living in the house to fully fund these reserves. And that's $2,700 per year. That's not a perfect number because not everybody lives in the house. So let's take these numbers and see how we can further utilize those to spread this cost among those that live in, as well as the townies, those that are not living in the house. So you got that 6270 number, remember that. Theo, let's go to the next slide. So let's just figure out how to calculate some parlor fees. And this, again, you can do this however you want to, but in this example, I did it as an 80-20. So 80% of the cost being charged to those that live in, 20% to the townies. Maybe there's a lower population of non-residents than residents in this chapter. In this case, you just take the 6270 times 80%, divide that by the number of beds, the number of people living in. That's how much rent, the $167 a month you should be charging in order to keep those reserves maintained by those brothers living in. And then conversely, the townies make up 20% of that charge. You should be charging them $25 per head per month for the wear and tear on your house to spread out those costs. You can make that 75-25. You can make it 50-50. I don't know what the situation is in your house, but that's a way of thinking about it and how to maybe spread this out so that you don't get too far behind in terms of what you're charging people. Let's go on to the next one here, Dio. There are 4 tabs at the bottom of the spreadsheet. We're only focusing on the third one, which is the reserve study. But to the far left in the green is a details tab. That's of not much significance. It's just to take care of notes and put in some ideas or whatever you want to. It doesn't feed into the spreadsheet. But the next tab does have quite a significant use. It's in blue or purple in this slide. That is the budget pro forma tab. I'll talk about that a little bit more in a couple of minutes. We don't have time to delve into it, but I'll tell you how you can get some information on that. The third tab, of course, is this reserve study. And then the fourth tab, the yellow tab, is the cash flow slide. This can be very useful to use. So let's go to the next slide here, Dio. This is one of 2 pages of that cash flow spreadsheet that feeds from the reserve study tab. What this does is take all of those expected lives and spread them out so that in this situation, you can see in year 5, a lot of those things are hitting, where maybe all of these items are going to be needing replacement in that year. It may not be the 5th year for all of these, it might be the 4th, or it might be the 6th or the 7th, but it gives you an idea of the magnitude of what's going to hit you in that approximate time range. So in this instance, and then also at the bottom, and you can't see it on this, it goes beyond this, it will sum what your reserves are to date that have not been used in prior years versus what your expected costs are going to be that year. And you'll be able to see what your shortfalls might be. So here in year 5, we might be expecting to see a shortfall. The numbers are too small for me to figure out what that is, but it may show that we're going to be $200,000 or $300,000 behind in terms of what we need in dollars to replace what's going to become obsolete. If we know that today, we can realize that we're going to have to do some fundraising efforts to make up that difference, because maybe we can't charge enough rent to the undergrads to be able to fully reserve for that eventuality. So that's what's showing us here how well the rents are going to keep up with this, and also it helps us plan for future fundraisers. Let's just go to the next tab. I mentioned that, or the next slide, I mentioned that there was a blue tab for budget pro forma. Again, we can't go into that today, but it's a very useful tab, and I did a webinar on this previously. And to find that webinar, just go to the phygam.org and hit the graduate tab, and then under that hit housing. So these are all of the things. You've probably all gone in to try to see this, hopefully, and if not, this is how you do it. Under housing, you've got everything from best practices to this reserve study that we're talking about today, to a bunch of other very, very useful resources for you to take a look at to hopefully help you in what you're doing day to day to help the fraternity. Under that, second to the last, is webinars. If you click on the webinars, you go to June 2020. It's a working session for budget planning, and that's where I discuss the nuances of that budget tab, and also what we should be thinking about going forward for the various aspects of your budget planning. So Dio, last slide, please. So here are the takeaways. What we're trying to do here is to give you a picture of the magnitude. There's nothing, like I said, there's nothing that is rocket science about this. There's nothing that's exact science about this. These are guesstimates. But what you don't know can very much hurt you going forward in the future. It can lead to unexpected situations, and if you have not planned for the fundraising and so on, and if you don't listen to the fundraising session, hopefully you will take a look at it. I just sat in on it in the previous discussion. You need to be planning 5 years ahead of any kind of fundraising that you're going to do. You can't just hit brothers out of the left field. So this is a tool that will help you to anticipate when you should be thinking about doing that. You need to get a start on it sooner than later. Just do it. I think especially if you enlist a couple of undergrads that will take ownership of this and help you work through it, I think you'll be done with this. I'm serious, in a week. It could be a couple of days, and that's just part-time. I'm not talking about a full week. I've played with this a lot, and it's very, very quick to populate these line items, and then you get the information. So the other thing about having the undergraduates work on this is that you get their buy-in. When you start charging rents that are inflated a little bit next year, these guys are maybe going to understand a little bit about what you're facing in terms of trying to operate this facility. It is going to be an eye-opener in almost 90% of the cases. Some of you are probably very well funded. Probably those of you that are sitting in on this session, you may not be as well funded, and the magnitude can be immense. I mean, with the other groups that I've worked with, this has shown them that there are some facilities they need to sell because they just can't keep them up. In this situation, that's not an option, and you need to figure out how to keep them up. So the tool is here to help you in the RET calculations, both for live-ins and for Tommies. And it's also here to help you for planning for future fundraising so that you can understand not only the dollars. We've all been on the opposite side of those fundraisers where you get the phone call and they say, we want you to contribute X amount. Well, why? And why haven't you planned for this? Or what is the money going for, or whatever? You've got all the information right here at your fingertips to say, here's the deal. In 3 years, we need a new boiler, we need a new roof. We need all these new things. And maybe give them naming rights, whatever, but at least they'll know where their money is going to, and it's not going just into a sinkhole. So that is what the tool is, how to use it start to finish, and hopefully it'll be very useful for all of you going forward. So I wanted to leave a little bit of time here for some questions. I see there's some participation in the, I see that somebody has a residence built in 1930. You still have the original windows. They don't build them like that anymore. I've got a dryer that's 25 years old, and the guy keeps saying, keep replacing the parts because the new ones won't last more than 12. Anything that anybody wants to ask about at this point? And Dio, maybe you can unmute people if they want to ask them directly. I found that usually raising hands helps too.
Well, Jim, it's Bob Niebaum, Case Western Reserve. I've been doing this for, I don't know, several decades, but it's an excellent tool, a very useful tool. You kind of take a step further from something I learned in House Corporation School, NIC, a number of years ago, actually many years ago. That is one of the important things to do is to capitalize and depreciate as part of your accounting. You use accrual-based counting and capitalize and depreciate. On the one hand, it makes your balance sheet look better if you have to go and borrow money sometime. But on the other hand, it's good discipline because you can list out all the major things you've spent money on, and you can use realistic lifetimes as you've shown in the chart there. You're not interested in accelerated depreciation because we're not paying income taxes. And it's there tacked on the back of all your financial reports. So it's right there in front of you. So if you do need to update your reserve study or do one for the first time, chances are in your depreciation table, you're going to see when the roof was last replaced, or when the bathrooms were last remodeled, or you replaced all the window sashes, or something like that. Now, typically, we don't capitalize things that do not extend the life of the property. So you have to add in things that might be expensed, like interior painting and such. But just the simple discipline of capitalization and depreciation is a very useful, day-to-day, quarter-to-quarter tool, and leads you right into this reserving study. I think if we were a condo association, and at least in some states, maybe all states, you're probably required by law to do this as part of your legal responsibility, toward the individual condo owners who are going to be paying a monthly maintenance fee to get the snow plowed or the grass cut or something, but also are going to be paying a fee for the eventual replacement of the roof or the driveway. We're not in that class, so we're just left to live and die by our own merits, I guess.
Those are all good points. What we're really trying to do is fund that future depreciation year by year. And the condo example is a good one, and it hits home for me because we're downsizing, selling our house, and we just bought a condo. And one of the first things, well, I'm in the business, so not everybody does this, but one of the first things that I do is to check in and see what is the funded reserve account balance. Because if that is down to a very minimal amount, I know that I'm going to get hit with special assessments. And so let's face it, our fundraising is really special assessments to try to fund things that have not been reserved for at the fraternity level. So we're trying to avoid that as much as possible. It can't be totally avoided most of the time, but you're exactly right. These things are depreciating assets, and we need to fund into a kitty to replace those assets.
Hey, Jim, it'd be Steve here.
Hey,
It'd
Steve.
be interesting maybe to ask the brothers to or to activate their cameras. I'd be curious with a show of hands, how many of the people on the call have a current reserve study in place? Just curious. Good, JB? No, Jeff? Okay. Not Paul? Okay. David, does your group have one? No. Okay. Ralph, looks like you're trying to connect, but it's a black screen. So, oh, there you are. No. Okay.
No houses.
Okay. Brett.
Our house right now is currently owned by the university, so
Okay.
I think we've done some research on that, but there's a lot of costs that aren't borne by us, so I don't think we've gone to this in depth.
Okay. And in your situation with the university owning the house, you may be responsible for renovations if you wanted, or did they, if you said, hey, we want to upgrade?
Yeah, there are some things that we get involved with, or at the chapter, the undergrad chapter is like, well, we want to do this, then maybe that's something they take on as something they feel is a need, right? So it really depends on what it is. Maybe they do some of the fundraising if they want new couches, stuff like that, right? So it really depends. We definitely work with them, and but as far as major maintenance, that's the responsibility of the university, right? So.
Yeah, that's great.
More low risk items, I would say.
That's great. Well, good feedback. It looks like a good number don't have one of these. So Jim's a great resource. I'm going to volunteer Jim. If you have questions as you get through this,
Absolutely. And
please let me know.
Dio knows how to find me. So, usually when people talk about a reserve study, first thing that comes to mind is, well, that's got to be a third party. Somebody's got to come in here and do it. And oh my gosh, that's going to cost money, and we don't have money, and so on. So Steve has been instrumental in putting this study together. I've done some fine tuning on it for other groups, and you can use this and tweak it in different ways for your own situation. But I can tell you, it's very efficient, and it doesn't take very long to utilize it. And I strongly suggest that you do it in-house and just get your arms around this. You can always hire somebody else to, maybe one of these certified home inspectors can come in and take a look at what you've done. And instead of starting from scratch, maybe they can fine tune it for you. That'll cost you less money. But this will give you an idea of where you're heading, and it'll happen in a very short period of time. Any other comments? Well, good. With that, I think we can wrap this up and go on to the next session. Just remember, you have to go back to your overall and click on the Zoom meeting that you want to from the handout that Dio sent around. And exactly that one right there. And hopefully I won't see you, I don't think, in my next session here, but thank you all for participating.
Thank you, Jim. Well done.
Very welcome. Thank you.
Yes, thank you so much. We've got lots of expenses coming up. We do own our own house.